everybody, I am Attila Tanner. Welcome to a brand new video of NextEra. I hope you're all doing well. It's been 2 weeks since the last video, so we are due for an update. We're gonna look over the different indexes, how they performed. We're gonna look at the different stocks we picked beginning of the year and from April in the different categories, how they performed. And then we're gonna go over the regular reporting. All right, so let's look at the different indexes. S&P 500, they had a good quarter, 8.3% up. And year to date, meaning from January 1st until June 30th, they were up 15.9%. NASDAQ also had a great quarter, 12.8% up. And for the year, they've been up incredible 31.7%. Let's see if they can sustain that for the full year. All right, when we look at Dow Jones, they were up 3.4% for the quarter. And for the full year so far, they've been up 3.8%. When it comes to the TSX index, the Canadian index, last quarter was up 0.3%, and for the year, meaning from January until end of June, is 4%. So it's good to see that all the indexes are up after some years where we had a lot of minuses. Now, let's look at the different categories of stocks that we picked beginning of the year. So we're going to start with the value stocks. Instead of going to individual stocks, I'm grouping them because I'm showing them always 3 by 3, so those 3 are grouped together. So US value stocks from Q1, they were up 15% in average, meaning from January until now. And those ones we picked from Q2, meaning from April until now, they were up 7%. The Canadian dividends didn't do too well. From Q1, they were down -1%. But this one from April, they were up 1%. So US performed better than Canadian when it comes to the value stocks. On the dividends, US performed not so good. From Q1, they were down -8%. And from Q2, they were down -10%. Canadian dividends from Q1 was down 1%, while from Q2, they were up 3%. So that shows us a little bit that dividend stocks is not performing too well in a growth environment like we saw previous year when the stock market was down. Dividend stocks were doing quite well. All right, next category, the growth category. This is basically sales growth is going faster than the stock price growth. In the category that we picked from Q1, from January on, they were up 31%. And those from April until today, they were up 14% for US. For Canada, from Q1 until now, they were up 23%. And from Q2, from April until now, they were down -2%. When it comes to the Pricey category, this is when the stock price is growing faster than the sales growth. In the US stock, those continue to grow fast. So they were up 30% from Q1 until now. And the Q2 stocks from April until now, they were up 39%. The Canadian ones from Q1 until now was up 7%, and from Q2 until now, down -1%. Also, I'm looking at how all the stocks that we are following, how they are performing. So this is not something that numbers I'm coming up with. Everything comes from the computer program with the formulas that is in place. All the data is coming from the actual website of the companies that produces the quarterly results, and that information is fed into the computer, and from there we are calculating a target rate. So when we look back, the last quarter, last 3 months, from April until now, how the different predictions of all the stocks we're following, we're talking hundreds of stocks for US and for Canada. And in the US, we have an 87% accuracy, meaning that the stock is going towards the target rate we have put. And in Canadian market, it's a 94% accuracy that is going towards the target rate we have put. Of course, every 3 months, there is a new target rate because a new quarterly result is out. So we have to, steer towards the new target rate. Sometimes it's a similar target rate like last time. But and then we're comparing where is the stock price now and is it going towards that direction. And so those are the numbers. Of course, ideally we should be 100%, but I think it's kind of impossible. But we have to strive improving the formulas and see how we can get to it. But it's quite good. All right. Let's go into the regular reporting. We're going to start with the US market and the value stocks there. ExxonMobil is number 1, JP Morgan is number 2, and we have a newcomer, Tencent, spot number 3. They have a $408 billion market cap, and their price to earnings is less than 16. Chevron, who was in the list, is out from top 3. Dividends in the US market, Verizon is number 1, AT&T is number 2, and 3M is number 3. The growth category, meaning the sales are growing faster than the stock price, NextEra Energy is number 1, Pfizer is number 2, and US Bancorp is number 3. The Pricey category, meaning the stock price is growing faster than the sales growth, Vroom is number 1, Nvidia is number 2, and Blackstone is number 3. Alright, that was the US market. Let's go into the Canadian market. We start with the value stocks there. Royal Bank is number 1, TD Bank is number 2, and Bank of Montreal is number 3. Dividend stocks in the Canadian market, Tourmaline Oil is number 1, Transalta Renewables is number 2, and Enbridge is number 3. The growth stocks in the Canadian market, meaning the sales is growing faster than the stock price, Capital Power is number 1, Telus International is number 2, and Brookfield Asset Management is number 3. The Pricey category, meaning stock price growing faster than the sales, Bombardier is number 1, Franco Nevada is number 2, and we have a newcomer, West Fraser Timber is on spot number 3. The sales declined 43%, while the stock price was down minus 6%. Wheat and Precious Metal, who was in the list, is out from top 3. Alright, this concludes the report for this time around. Thank you so much for watching. If you like those videos, please like and subscribe so you don't miss out on the next one, hopefully in 2 weeks' time. At that time, we are thinking of going over and looking at the mergers and acquisitions of different companies. We did that segment last time, a few months ago, so we're gonna look into that again. Meanwhile, follow me on NextStock and Twitter for any news I might have. Alright, always get a lot of information before jumping ahead purchasing stocks. Thank you so much for watching. Until next time, bye bye.